So every year, the Australian Tax Office drops its Corporate Tax Transparency Report, which is basically a giant spreadsheet showing how much tax Australia's biggest corporate companies actually pay. It covers more than 2,700 corporations from the last financial year, which is June 30th, 2023 to July 1st, 2024. It lists their income, their taxable income, and tax paid, which is the important part. So our job as journalists is to dig through the numbers and find the biggest red flags when it comes to corporate taxpayers in Australia. And once again, unfortunately, it is the same story. Billions of dollars in revenue and next to nothing in tax.
Even so, total corporate tax rate was slightly down, but still the second highest on record. Most of that extra revenue came from the non-mining sectors, meaning everyday workers, everyday punters like you and me, smaller businesses are still the ones footing the bill.
So today we are going to break down the top 5 tax dodgers and the top 5 tax heroes of the Australian mining industry. Who's paying their fair share and who's taking us for a ride. I'm going to take on the biggest tax bludgers and Conrad is going to take on the biggest tax heroes of the last financial year. Now for context, this is based on the last year's data, which is what the report was released recently by the ATO. We'll be back with Michael West Media's report on the current figures later this year. Alright, let's get into it.
Now, this one's a little bit trickier. There are a few caveats and we'll explain as we go. We look at total income, taxable income, and tax paid, weighing both the rate and the size of the contribution. It's not just about flat tax percentages. It's about who's actually putting serious money back into Australia. These are the rare mining giants doing the right thing, the ones that are actually paying up. Coming in at number 5, we have mineralogy owned by billionaire Clive Palmer, booking $816 million in income, $315 million in taxable, and with a $94 million tax paid, giving him an effective tax rate of 11.52%. Clive Palmer's Mineralogy is a privately owned iron ore company based in Western Australia. It's a mid-tier contributor, but consistent. Palmer's company pays more than many foreign mining corporations with far higher revenues. It's one of very few Australian-owned operators that actually pay tax every single year. And it's a rare case where a loud billionaire still puts some money back in. So cheers, Clive.
So coming in at number 5 on our top tax dodger list is Tianqi Lithium Energy. These guys have a revenue of just under $7.5 billion, not million, dollars. Out of that, $4.5 billion of that was taxable income, and guess how much tax they paid? 0. So you probably haven't heard of these guys before, but Tianqi Lithium is a joint venture between China's Tianqi Lithium and Perth-based IGO Limited. So this company runs the Kwinana lithium hydroxide refinery over in Western Australia, the supposed jewel in Australia's clean energy supply chain. Yet, despite more than $7 billion in income, these guys paid nothing in corporate tax. Now look, there is some context here, right? Australia's going through a bit of a green revolution. It's years of accumulated tax credits and capital deductions from building the refinery itself. Technically, it's all legal and above board, but it shows how Australia's systems lets billion-dollar resource projects delay paying tax for years and years, even as they profit from the energy transition. Over to you, Conrad.
Coming in at number 4, we have Yancoal Australia Limited. Don't let the Australia fool you. Booking almost $8 billion in income, just under $3 billion in taxable, with a tax paid of $837 million, giving them an effective tax rate of 29.75%. Now, Yancoal is one of Australia's biggest coal producers, majority owned by Yangzhou Coal Mining Company, a Chinese state-controlled entity. It operates major projects across New South Wales, Queensland, including Hunter Valley operations, which is just down the road here, one of Australia's largest thermal coal mines. Now, while its $837 million tax bill looks impressive, I am initially impressed, it's inflated by back payments and PAYG installments from previous years after finally transitioning from years of tax losses to profitability. In 2022, Yancoal ranked number 9 on Westie's top 40 tax dodgers list. So we will be watching closely to see whether this new trend of paying tax continues.
So number 4 on our tax dodgers list is Mineral Resources Limited. These guys had over $6 billion income and $39 million taxable income. And guess what? They paid 0% tax. So these guys are led by a billionaire called Chris Ellison. You might know them as MinRes. What they do is they pull billions of tons of iron ore and lithium out of the ground, sell it, and give back nothing in tax. To make matters worse, Ellison helped run a decade-long tax evasion scheme that funneled millions of dollars through offshore accounts, a deal that quietly settled by the ATO behind closed doors. We reported it here in Michael West Media, but the company's zero tax record unfortunately isn't new. So congratulations, number 4.
Number 3, Australia's own Hancock Prospecting, brought to you by Gina Reinhart, booking in an income of just under $8 billion and a taxable of just over $7 billion, with a tax paid just shy of $1 billion, giving Gina an effective tax rate of 13.4%. Hancock Prospecting is the iron ore empire of Gina Reinhart, Australia's richest person and one of its most powerful mining magnates. The company owns the massively profitable Hope Downs and Roy Hill mines in Western Australia, exporting millions of tons of iron ore each year. And unlike most billion-dollar miners, it actually pays tax. In 23-24, Hancock Prospecting handed over nearly $1 billion to the ATO, enough to fund the government's entire aged care capital works program. Say what you want about Gina's politics, and I will, but at least this billionaire pays her dues. Well, mostly. You might complain about it. Whether it's the same as the average punter pays, well, I will let you decide.
Righto, so number 3 tax dodger, we have ConocoPhillips Australia Operations Pty Ltd. These guys had a total of $1.3 billion income, 0 taxable income, and 0% tax paid, which is the effective rate of 0%. The US oil and gas giant behind the Darwin LNG has operated in Australia for decades, and they still haven't paid a cent in corporate income tax. ConocoPhillips blames billions in project costs, intercompany loans, and PRRT deductions. Don't worry, we're going to get to that very soon. It allows it to wipe out taxable income year after year. It's a pattern of behavior that we've seen before. It's the perfect case study in how multinationals can export Australian gas for decades and still tell the Australian Tax Office that they've made no profit at all.
All right, number 2, we have Fortescue Metals Group, bringing in $28 billion in income and $4 billion in tax paid, giving it an effective tax rate of 14.8%. Fortescue Metals Group, founded and chaired by Andrew Twiggy Forrest, is one of Australia's biggest iron ore exporters and a rare example of a mining giant that consistently pays its share. The company's $4 billion in 22-23 could alone fund the entire budget of the ABC 3 times over. This is proof that mining profit doesn't have to come at the public's expense. Forrest may be outspoken on philanthropy and green energy, but when it comes to tax, Fortescue walks the talk.
Okay, so coming in at our silver medal, number 2 is Santos, a Michael West Media favorite company. These guys had $8.2 billion income, $29 million taxable income, and 0% tax paid. Santos is Australia's second largest gas producer and one of its most persistent tax ghosts. Santos is coming close to their 10-year anniversary of paying no corporate tax here in Australia, despite raking in billions of dollars from projects by exploiting the PRRT, which is the Petroleum Rent Resource Tax, endless deduction loopholes, and years of capital write-offs. It manages to turn massive profits into losses on paper. Very well-paid consultants. Meanwhile, Australia gets higher gas prices and is in the middle of an energy crisis, yet these guys are posting record profits.
And coming in at number 1 with $52 billion in income, $22 billion in taxable, and $6 billion in tax paid with an effective tax rate of 28%, we've got Rio Tinto. Rio Tinto is one of the world's biggest mining giants, with major iron ore, aluminium, and copper operations across Western Australia and the Northern Territory, headquartered in London and largely foreign-owned. Rio is often criticised for its global practices, but when it comes to Australia, it's one of the very few that consistently is paying up. This 6.2 billion tax bill for 23-24 wasn't just a one-off. It reflects years of steady contributions, close to the full rate. Honestly, in an industry that's being built on tax loopholes and creative accounting, Rio Tinto is proof that paying tax in Australia isn't impossible. It's just optional for most of their peers.
And the one you've all been waiting for, but unfortunately you probably don't know their name, but you do know their brand. Come on down, Viva Energy Group Ltd. These guys had $127 billion in revenue, $103 million as taxable income, and these guys only paid $18 million in tax, which is an effective rate of 0.014%. Yes, there's a decimal point there. Now, you may not know the company by name, but everyone who drives in Australia fuels Viva's profits. The company owns the Shell fuel brand, runs the Geelong oil refinery, and supplies petrol, diesel, and jet fuel nationwide. Yet, its effective tax rate rounds down to zero. Despite raking in over $127 billion in revenue, Viva paid just $18 million in tax. Its majority shareholder is Swiss-owned Vital, which is one of the world's largest oil traders. And they benefit from complex corporate structures, offsets and deductions that basically makes its tax bill vanish. While technically these guys are classified under fuel distribution, Viva is central to Australia's oil and gas economy, from refining to retail to planned LNG infrastructure. We didn't really want to let these guys slide. It's the company that everyone uses, but few people realise pay next to nothing back. If there were a gold medal for corporate tax minimalisation, Viva would probably claim deductions on it. So the combined total income of these top 5 companies is $150 billion. That is a number that the normal human brain cannot understand. Yet, together they paid just $18 million in tax, which is a combined effective tax rate of, wait for it, 0.01%. In real world terms, that means they just paid 12 cents for every $100 they made. For comparison, the median Australian worker pays an effective tax rate of about 25%, or $25 for every $100 they earn, or 25 cents in the dollar. These corporations, on the other hand, paid next to nothing. If these guys paid tax like the average Australian worker, the government would have collected around $37.5 billion instead of pocket change. For comparison, that is almost 65% of the entire NDIS budget here in this country. Yeah, right, and here's the kicker. About 86% of Australia's oil and gas production is foreign owned. So while we're told there's no money for housing, aged care, NDIS, the ABC, wage rises, dental and Medicare, the truth is that the wealth is in this country, it's just not for us.
And before we wrap up, there's one tax that deserves a very special mention, and that is the PRRT, or Petroleum Resource Rent Tax. It was supposed to capture the super profits from our natural gas, but in reality, it's become a running joke. Despite the record LNG exports and billions in profits by companies like Santos, Chevron, and Woodside, they pay next to nothing under this system, all thanks to a maze of deductions and loopholes that let them write off almost everything. And at this point, it shouldn't even be called a tax. It's a royalty, a payment for a resource that belongs to the people of Australia, punters like us.
So a big thank you to Conrad from Punters Politics for jumping in and helping us out with this video. You can check more of his stuff over on his own YouTube channel, but if everything goes right, we should be cross-posting this anyway. My name is Josh, and if you feel like supporting this kind of journalism, which takes hours and hours of trawling through spreadsheets and really boring documents, you can support us over on patreon.com/thewest report, where we are entirely community funded. It is thanks to your contributions that we can do stuff like this, and we've got really big plans for 2026. So if you like this video, chuck us a like, chuck us a comment, and we'll see you on the next one.